Hi everyone, it's Monday, October 28th. This is Lee McMahon at the Global FX Club Daily Moving Average video. It's called the Daily Moving Average video, but it has long ago become the Daily Price Action video with some moving averages included. It is just after 5 o'clock here on the East Coast, so the day is officially done. Monday's in the books, and for most places when you're watching this, it'll technically be Tuesday. Very dull day today. There's really no other way to put it. Pretty much all the major equity markets finished within 0.1% of where they closed on Friday. The exception being the Nikkei, that was up just over 2%. Major currencies, not any different. Take a look a little bit at what's going on. We have a whack of U.S. data due out tomorrow, all delayed due to the shutdown. So we'll see if that manages to spur a little bit of energy here in the markets. Please do me a favor and take a moment to read the risk disclaimer, which should now be on your screen. We'll get started. Alright, so this is the 4-hour dollar index. I don't pay a ton of attention to the dollar index, but I do think it is worth noting that we have a very clear inverse head and shoulders here on the hourly. The neckline is about 79.45, so get above there and we may have some room to run to the upside for the dollar. It's just something to sort of keep in mind while you're looking at setups for the next couple days. Dollar yen, alright, rallied very nicely here off of this ascending triangle. Let me actually line these points up. Okay, very nice bounce. Again, I talked about this in the weekend webinar. Still looking for it higher, still looking for 99, and then we'll see. Breakout means we're above 103. Breakdown back lower means 97.25, 97.40 or so. Support will get tested. That trend line again, and then we'll just have to look to play the breakout. I am biased slightly to the upside here. Even through, if I am biased for a breakout to the upside, I'm absolutely biased to the upside until we get to 99. But I am biased that we will break through eventually 99 and continue on higher. I think that's just the way that interest rates and equity markets are looking to take us. Speaking of equity markets, let's take a look at E-minis. Okay, this is the 4-hour E-mini chart. Let's go to the daily chart. Dull day. We finished up 4 points, just shy of 0.25%. We are testing this, what is basically a weekly ascending channel. All right, it's not pretty. It's not perfect. I've actually had to redraw it several times, but that is something that you should keep an eye on. We do have 1, 2, 3, 4-ish tests on it, so it is something that at least is to a certain extent technically valid. So sort of keep your eye on that. But really very little else to talk about. In E-minis, we're still pressing the top of that range. We didn't have anything to turn us around today, but we may have gotten something to turn us around here in after hours. This is Apple. AAPL. I'm assuming everyone has heard of Apple, but if you haven't, they're a U.S. company that makes iPods and iPads and other things. They are a major player on the NASDAQ. They are a huge tech company, and they are very much paid attention to. They released earnings today. All right, the stock is trading lower after earnings. They topped EPS estimates, but lower revenue, lower guidance, and a smaller than expected cash flow, all sort of hurting the stock. This stock is famous for rallying after earnings reports, though, so I would not be in line to short the stock by any means. But, I mean, if we do see a sell-off, I mean, Apple is one of the stocks that could absolutely lead a sell-off lower. Alright, back to currencies. Euro-dollar. 4-hour chart of euro. Alright, a little bit like a head and shoulders here, starting right under this 618% fib. Again, if you didn't watch that weekend webinar, I would recommend it. You can find it on our YouTube and Facebook pages. We are testing this major 618% fib. Alright, we've actually held underneath it very impressively so far. So that's something to keep an eye on too. Euro pound. Alright, I still like euro pound to touch 86. And we did actually have a fairly progressive day today as well. We'll see. I mean, I just talked about how the euro is testing some major resistance. So if euro pound's going to move higher and euro's going to move lower, we're going to need the pound dollar to move lower as well. Fortunately, there is a very clear technical setup for that to happen as well. All right, we have broken down out of this ascending trend line here. We managed to close below this 50 period EMA here in red on the 4-hour chart. We retested, we moved lower again. This rectangle now is the significant support level to keep your eye on. It includes the 100 period EMA here on the 4-hour chart. So if we do manage to get below what is basically, call it 161, that opens up 160, and below 160 opens up 159. So very nice orderly 100 pip targets there on pound dollar. Aussie dollar, all right, starting to break down as well. Peaked here at this 50% fib, shot back below it on a very strong bearish candle. So there's something you can read a little bit into that reaction. And we are now marching here below this trend line dating back from really only late September, early October. So not a super significant trend line, but we are moving below it. So that is something to sort of keep an eye on as well. Tonight we have a speech by the Reserve Bank of Australia Governor Stevens. He's speaking in front of an investment conference. It's something like the 5th annual Australian and New Zealand Investment something symposium or whatever. So there are actually some things he may talk about that might be significant. Australia and New Zealand both dealing with overvalued currencies, both dealing with an overheating housing market, so we could actually see him address some of those very relevant and pertinent issues. And if he manages to talk down the Aussie, there is a very nice technical setup there that I just showed you that could push it lower. Kiwi dollar, still looking for a move lower to about this level here. This is called 82.30. From 82.30, we could see a bounce. And actually probably should see a bounce back up towards 83 to form a right shoulder before the stronger breakdown. Alright, so that's a couple ways you can trade Kiwi dollar. Dollar CAD, still looking for a move up towards 105. If we continue to consolidate here, I'll absolutely trade this breakout for a move up towards 105. But I would need it to consolidate for a little bit before I'm willing to hop on board that. Dollar Swiss, alright, holding. Again, charts of the day talked about this. Webinar talked about this. Weekly, major weekly horizontal support. Holding very nicely. Potential sort of really sloppy inverse head and shoulders here. Again, looking for a move up towards about 90-80 or so, which is the 200-day EMA in this first descending trend line. EuroCAD. Okay, consolidation, retracement needed for longs. Pound CAD, same situation. Would love to see Pound CAD continue to drift lower so I could buy it. Aussie Yen. Okay, moved lower today. Tried to hold out with dollar yen strength, but Aussie weakness was too much for it. Euro Yen. Kind of a similar story. Still an open gap on Euro Yen, so watch for that. It's at like... I think it's still open. Yeah. So open gap at about 134.46. All right. So if we do manage to get down there, we may find some bids there. All right. So that's what I'm looking at for the next couple days, mostly tomorrow. Dollar poised to continue strengthening, I think, but that data either ruin everything or really accelerate some of these moves. So watch the Aussie crosses tonight with Steven speaking, and then watch the dollar tomorrow. And also watch very carefully how the U.S. equity